Hello everyone. Today we're exploring the Federal Reserve, the central bank of the United States that's constantly in the news. In just 5 minutes, you'll understand what the Fed does, how it affects your daily life, and the current situation with President Trump. Let's dive in. What is the Federal Reserve? The Federal Reserve was created in 1913 after a series of financial panics devastated the American economy. President Woodrow Wilson signed the Federal Reserve Act to create a more stable financial system. The Fed has a unique structure with 4 main parts: a 7-member board of governors, appointed by the president, 12 regional Federal Reserve banks across the country, the Federal Open Market Committee, FOMC, that sets interest rates, thousands of member banks that are part of the system. What does the Fed do? The Fed has 3 main jobs that affect your everyday life. First, it manages interest rates. When you hear the Fed raised rates, it means borrowing money will cost more, affecting your mortgage, car loans, and credit cards. When rates go down, borrowing gets cheaper. Second, it ensures financial stability. The Fed monitors banks to prevent failures and steps in during crises like the 2008 financial collapse and the COVID pandemic. Third, it maintains price stability. The Fed works to keep inflation at around 2%, not too high, which erodes your savings, and not too low, which can stall the economy. How does the Fed control the economy? The Fed's main tool is the federal funds rate, the interest rate banks charge each other for overnight loans. This rate influences all other interest rates in the economy. When inflation is too high, the Fed raises rates to cool things down. When unemployment is high, it lowers rates to stimulate growth. The Fed also buys and sells government securities to control the money supply. When it buys securities, it puts more money into the banking system, like adding water to a pool. When it sells securities, it takes money out. The Fed needs to be independent from political pressure to make decisions based on economic data rather than election cycles. This independence helps create long-term economic stability. President Trump and the Fed, current tensions. Recently, President Donald Trump has reportedly considered firing Federal Reserve Chair Jerome Powell, creating significant tension. The disagreement centers on interest rate policy. Trump wants lower rates to boost economic growth and offset effects of his tariff policies. Powell and the Fed worry that cutting rates too aggressively could cause inflation to rise again. This situation has raised concerns across the political spectrum. Both Democrats and Republicans worry that removing Powell could destabilize financial markets and undermine the Fed's independence. Treasury Secretary Scott Bessent and other officials are advising against firing Powell, warning of potential market turmoil worldwide. By law, Fed governors can only be removed for cause, meaning misconduct, not policy disagreements. While Trump appointed Powell during his first term in 2018, their relationship has become strained as their economic priorities differ. The uncertainty has created volatility on Wall Street as investors try to anticipate what might happen next. How does it affect you? The Fed's decisions directly impact your finances. Your mortgage and loan payments rise or fall with interest rates. Your job security depends on economic stability. Your retirement accounts are affected by market reactions to Fed policies. Your savings earn more or less interest depending on Fed rates. Understanding the Fed helps you make better financial decisions and plan for your future. Thanks for watching this quick guide to the Federal Reserve. If you found it helpful, please like and subscribe for more easy-to-understand financial videos.